Adobe stock is down roughly 27% from its recent highs. I actually used to own the stock as well. I bought it around $278 when the stock crashed after Adobe announced that it was trying to acquire Figma, as I thought that this was a massive overreaction by the market. I ended up selling the position around $514 for an over 80% gain, as the stock nearly doubled while seeing very little fundamental growth. The market simply doubled the stock for seemingly no fundamental reason. So while Adobe was cheap at $278, I believed it was quite expensive at $514. So I got out. Since then, the stock has now come back down quite a bit, and people have been asking me if it is looking attractive again and if I am going to be buying back in. So in today's video, I want to quickly go over Adobe and update you all with my thoughts on the stock before it reports its earnings next week. I think what makes the most sense is to go back and briefly explain why I thought Adobe was looking cheap when I bought it and expensive when I sold it, so that you can better understand my thoughts on the stock today. So with that being said, let me quickly explain why I purchased Adobe when I did. And it really comes down to the fact that the stock was trading for a price to free cash flow of roughly 18 at that time. Now, a price to free cash flow of 18 is well below the company's historical averages. It's actually almost half of Adobe's historical averages. So it was trading for a significant discount to its historical average price ratios. Then when I sold the stock around here, it was trading for a price to free cash flow of about 33, which is back to the company's historical averages. Now, there is an argument that when I sold Adobe at a price to free cash flow of 33, it was still slightly below its historical average price to free cash flow. So the stock could have looked like it was selling for fair value or slightly below fair value still. However, in my opinion, this is actually a pretty expensive price to pay for a business that is growing its revenues at 10% annually, which is what Adobe is doing. A 33 multiple for 10% annual growth is on the higher end of my personal investment range, and as an individual, I do think that is a pretty expensive price for Adobe. Now, if we take a look, Adobe stock then went all the way up to a price to free cash flow of 40.8, which I do think is actually quite dang expensive. However, today Adobe is trading for a price to free cash flow of about 31.5, so let's take a deeper look at the company's most recent earnings report and its outlook to get a little bit of a deeper sense of how the business may be valued today. So I have some screenshots right here from Adobe's most recent earnings results, and this says, Adobe achieved revenue of $5.18 billion in the first quarter of fiscal year 2024, which represents an 11% year-over-year growth. So as of Adobe's most recent quarter, the company is still growing its revenue by around 10% annually. However, we can see that the cash flows from operations were $1.17 billion, and the company repurchased about 3.1 million shares during the quarter. Now, if we move on to Adobe's cash flow statement right here, which is my favorite financial statement, we can see that its stock-based compensation was $451 million, and it did increase by about 10% year over year. And as a percentage of operating cash flows, this is about 40% of Adobe's operating cash flow in the first quarter, which in my opinion is quite high. Additionally, we can see that the operating cash flow was about $1.17 billion, which is down roughly $500 million year over year from the first quarter of 2023. So at face value, Adobe's operating cash flows in the most recent quarter actually declined quite significantly year over year. Now right here we can see that Adobe's capital expenditures were only $37 million though. So it is costing Adobe almost nothing to produce this $1.2 basically billion in operating cash flow. This is almost no capital expenditures, which is a very good thing to see, and this is one of the reasons why I love these software type companies. Because basically all of the operating cash flow becomes free cash flow for the business and for its shareholders. Now here we can also see that Adobe repurchased about $2 billion worth of stock in the first quarter of 2024, which is actually more than the company produced in free cash flow. So it used some of its cash position in the first quarter. So overall, the first quarter in terms of cash flows actually didn't seem that great because again, the company saw a $500 million decline to its operating cash flows, which is about a 33% decline to the company's overall cash flows in the first quarter. So if we head back over to Stock Unlock and we take a look at Adobe's operating cash flows in the trailing 12 months, we can see that it did peak here in the third quarter of 2023 at about $8 billion. However, since then, Adobe's operating cash flows have been actually declining. Now, if we take a look at Adobe's revenue as well, we can see that the revenue has been continuing to grow, but again, the operating cash flow has been coming down. So it seems like Adobe's operating cash flows and free cash flows have not been growing with the company's overall revenues. In fact, if we take a look at Adobe's operating cash flow margin in the trailing 12 months, it is now sitting at about 34%, and we can see that it has been declining. Now, if we take a look at a quarterly basis, we can also see the decline to Adobe's operating cash flow margin, has really been accelerating over the past couple of quarters. So again, at face value, this all does not look very bullish for Adobe at all. However, if we go over to Adobe's income statement, we can see that there was a one-time termination fee in the quarter of $1 billion. So since Adobe's Figma acquisition did not go through, Adobe had to pay Figma $1 billion. This was part of the contract and the overall announcement of the acquisition. This is a one-time $1 billion expense for Adobe. And going forward, this is not a recurring expense. So I do think that it is fair to kind of adjust Adobe's figures here in terms of its operating cash flows and its profits to adjust for this $1 billion expense. Because if you are buying the stock today, then again, you should not be having this expense going forward. And you should be really looking at what is Adobe's profits going forward from here. So when we adjust for this $1 billion acquisition termination fee, then Adobe would have actually done about $2.17 billion in operating cash flow for the first quarter, which is an increase of 27.6% year over year. Adobe would have also done $7.5 billion in trailing 12 months free cash flow, which is not an all-time high for the company's free cash flow, but it would be significantly higher than the $6.5 billion that the company produced in the trailing 12 months now. We can also see here that Adobe's market cap is currently $204 billion on the stock market today. So if we pull out our calculator and go $204 billion in market cap for Adobe, and we divide this by the $7.5 billion in adjusted trailing 12 months free cash flow that the company would have produced without this termination fee, then we get a price to free cash flow of about 27.2 today. Now, if we head back over to our freeform tool and we go to Adobe's price to free cash flow historically over the past decade, then once again, we can see that Adobe's 10-year average price to free cash flow is about 34. So the stock is actually trading quite a bit below its historical average price ratios by about 30% actually. So if you're valuing Adobe solely based on its historical average price ratios, then the stock does look like it could be cheap relative to how the market has historically valued this business. So now let's go and take a look at Adobe's outlook for its next quarter results, which I do have right here. And here we can see that Adobe is projecting about $5.25 billion to $5.3 billion in revenue for its quarter coming up here. Now the math works out that Adobe is projecting about 9.3% revenue growth for its upcoming quarter here. So it's actually expecting its revenue growth to start decelerating in the next quarter. And 9.3% revenue growth, in my opinion, is not that much growth for a business that is trading for about 27 times its free cash flow. And yes, once again, Adobe is trading for below its historical average price ratios by about 30%. But me as an individual, when I am taking a look at a 27 multiple for about 9 to 10% annual revenue growth, I do think that this is a pretty high multiple to pay for that level of revenue growth. And in my own portfolio, I do have stocks that are growing their revenues and their profits at significantly faster growth rates and trading for significantly cheaper prices than Adobe. In fact, I have businesses in my portfolio that are trading for about 12 times earnings and growing revenues by 20% annually, which I think is a much more attractive price than what Adobe is selling for today. So to put it simply, when I am looking for businesses in the market and trying to compare Adobe versus businesses that I even own in my own portfolios, I do think that there are more attractive stocks out there right now, and I personally would want Adobe's price ratios to come down quite a bit more before I become interested in the stock once again. And again, when I first bought Adobe, it was at an 18 price multiple, which is quite a bit below where the stock is currently trading. And at this 18 multiple, I did believe that Adobe was looking cheap relative to its historical averages, and an 18 price ratio for a business growing its revenue at 10% annually, I also think is a pretty cheap price ratio relative to the company's growth. So that is the reason why I bought the stock historically, and at its current price, I just don't think that it is selling for a very attractive price relative to the growth that the business is projecting. So now let's go over to Stock Unlock's discounted cash flow calculator so I can better explain my thinking here as well. So what I did here is I am projecting out Adobe's free cash flow over the next 5 years, and I am saying that Adobe is going to grow its free cash flow by 10% annually and buy back about 1.6% of its shares annually, which is the company's 5-year average buyback rate. Now in this DCF, I am saying that Adobe will trade for a price to free cash flow of about 25, which personally I do think is a much more fair price to pay for this business, but I do actually think that this is still on the higher end of what I would consider fair value for a business growing its revenues by 10% annually. And when we enter in these metrics, we get a future stock price of about $730 for Adobe, which is a compounded annual growth rate to the stock price today of about 9.75%, which is actually below the S&P's historical average return rate of about 10% annually, which is overall why our DCF right here says the fair value for Adobe is $153 per share, or about 1% below where the stock is currently trading. And again, in my opinion, that 25 price ratio is still on the higher end of what I would consider fair value for Adobe. And on the higher end, that compounded annual growth rate is below what I think is attractive. And for those reasons, Adobe is just not at the price yet where I would find it attractive for me as an individual. However, with that being said, Adobe is currently trading for a 27 price multiple. So if Adobe can maintain that price multiple and still grow its cash flows by 10% annually, then the stock could deliver a compounded annual growth rate of about 11.5% today and be selling slightly below fair value. Now, if we want to push this price ratio even further out and we want to say that the market will continue valuing Adobe at 30 times cash flows, then its compounded annual growth rate could be about 13.8% or almost 14% over the next 5 years, if it can continue to grow its free cash flows at 10% annually. It really all comes down to the individual investor and what you believe the fair value for Adobe is and what you believe the market will pay for Adobe stock in the future. Personally, I do not think that a 30 multiple is fair for Adobe based on its projected growth, and I do think that there is a lot more attractive investments out there. But if the market does continue to value Adobe at a 30 multiple and the company does continue to grow at 10% annually, then it could deliver market-beating returns from here. I just do not have that conviction in the stock, and I do not have faith in the market to continue valuing this business at a 30 multiple if it continues to grow at 9 to 10% annually. So for those reasons, I want a bigger discount on the stock, and I'm not buying the stock at its current price because I just don't have that conviction in the market and in the company's future growth. So I hope that summarizes my thoughts on Adobe stock today well, and I also hope that it accurately explains why I am not purchasing the stock today at its current price. It really comes down to me not believing that the stock is actually selling for a discount relative to its future growth, and also me finding more attractive investments in the market today. That's really what it comes down to. And if you enjoyed this video or you found it helpful in some way, then please remember to leave a like on it because it does really help out my channel and get my videos in front of a wider audience. Also, if you're new here and you want to stick around and see more stock market related content like this, then please consider subscribing to my channel as well, because that would be pretty awesome. Also, if you want me to cover Adobe's earnings next week on the channel, then let me know down in the comment section below, because this is a stock that I do actively watch on my own, and I will be going through the earnings on my own anyways, so I can let you guys know what I'm thinking about the stock after the earnings come out, and some of the key metrics that I am looking for. Some things that I would like to see is Adobe actually beating its own revenue estimates, and seeing its free cash flow margins get back up and seeing its free cash flow growing in line with revenue once again. So that's what I'm looking for. But again, let me know if you want me to cover Adobe's earnings here on the channel next week. But that's going to wrap up the video for today, everyone. So thank you so much for watching. As always, I truly do appreciate it, and I really hope to see you all again in my next one.